Hello, everyone, and welcome to another quarterly update and Q&A brought to you by the team at Apollo Crypto. I'm Marc Woodward, investment partner, and as always, it's a pleasure to be joined by Henrik Andersson, founder and chief investment officer at Apollo Crypto, and who leads our investment team. For anyone new, Apollo Crypto is a multi-strategy investment fund manager that is based in Melbourne, Australia, and invests globally. We have a more than 6-year successful track record with 3 active funds, and we are focused solely on managing portfolios of crypto assets and strategies on behalf of wholesale investors, family offices, and fund of funds. Thanks very much to the audience for attending. We hold these webinars on a quarterly basis and also publish a weekly newsletter along with long-form quarterly research. Please head to our website at apollocrypto.com to subscribe and to find previous research and blog posts. The purpose of this webinar is to inform our investors and our followers and provide a general update on the crypto markets and on our funds. As a reminder, this is a general discussion and is not to be taken as financial advice. Please do your own research when evaluating an investment in the crypto markets. As always, we're happy to take questions from the audience, so please submit any questions as early as you like through the Q&A feature, and we will answer these towards the end of the webinar. With that, I'll hand it over to Henrik for his recap of the previous quarter and for his outlook for the rest of 2024 and into 2025. Over to you now, Henrik.
Thank you, Marc. Happy to be with you here again for another quarterly webinar. Let me share my screen and we can get started with the presentation. So the Q3 webinar, here's a little bit of an agenda for this session. We'll recap the year to date from a market perspective, some takeaways from Token 2049. We'll talk a little bit about the DeFi market, which is decentralized finance. And then we'll cover our view on the outlook of the market, both broadly the macro outlook as well as the crypto-specific outlook. We'll also talk about how our portfolio is positioning for the coming months. And we'll end with a Q&A, as Marc said. So please ask any questions you like in the Q&A feature in the Zoom. So with that, let's look at the market year to date. This is a very high level. Bitcoin, Ethereum, S&P 500, and Nasdaq Composite, which is a tech-heavy equity index in the States. As you can see, Bitcoin has been outperforming a year to date. That has been one of the big themes of this market. Equity markets has also performed well on the back of better than expected economic growth. We haven't seen really a recession in the US or elsewhere, as you know, many expected us to see a recession. That hasn't panned out. Instead, we have seen a decent economic growth in some of the largest markets. We're also seeing monetary policy easing. So we've seen rate cuts in Europe as well as in the US and elsewhere. We'll talk more about that later, but that has definitely helped the equity market. The S&P 500 is sitting just as close to all-time high. Bitcoin again has been outperforming both the equity markets, but also many other crypto assets. Part of the reason we believe is the introduction of the Bitcoin ETFs that was approved in January of this year, and we've seen good inflows, and we'll talk more about that as well later in the webinar. We also see Ethereum, Ether, that's the yellow line in this graph, has been underperforming year to date, is barely break even up until today from the start of the year. It's a little bit surprising to us that Ethereum has underperformed as much as it has. We think there's good reason to believe that Ethereum will catch up in 2025, so that gap will close. We see good activity on Ethereum. We have the Ethereum ETFs live as well, spot ETFs. And we have clarity from the SEC that Ethereum is not a security. And there's not that many assets that we have that clarity from the SEC around, so that should be positive. So once kind of we see momentum, money flowing into Ethereum, we think that assets could start performing, but we haven't seen that as of yet. Anything you like to add there, Mark?
Nope.
All right, let's move on and talk a little bit about one of our funds, the Apollo Crypto Fund. It's what we call our flagship fund. We've been running this fund since February of 2018. So track record is coming up to 7 years soon. It's a diversified portfolio with all our best ideas across liquid tokens, covering L1s, L2s, DeFi, NFT gaming, infrastructure and scaling technology, as well as a portion of allocation towards pre-token deals, or what we call primary investments. So yeah, I think we have a good track record since the beginning. You can see in the chart to the right a comparison to two different crypto indices. One is the S&P Cryptocurrency Broad Market Index. Another one is the CBOE Eureka Hedge Index of crypto hedge funds, and we have outperformed both of them since inception. This year has been difficult, and we're actually currently down year to date. And that's a result of many of the altcoins in the space underperforming year to date. Also, the Australian currency has been outperforming lately, which is hurting the performance in AUD terms. Obviously, if you look on a currency for currency equivalent, that doesn't really matter. But we report our results in AUD, so that will have an impact in that sense. There's something to remember there. The Australian central bank hasn't cut interest rates yet, which has resulted in the Australian dollar outperforming other currencies like the US dollar in recent months. And I think we'll talk more about the outlook later in the presentation, but we definitely have a positive outlook on the crypto markets. We think this is a long-term trend that will continue, and we have seen a lot of positive announcements in the last year, not the least introduction of the crypto ETFs, but there are also other underlying metrics that we follow that look positive, like things that is happening on chain with payments, etc. So we have a fairly positive outlook, and we think will remain an interesting asset class to have in your portfolio from here on. Want to highlight one of our other funds as well that we advise, which is the Apollo Crypto Market Neutral Fund. This is the BVI fund, so it's an offshore fund denominated in US dollar. The Market Neutral Fund seeks to generate a consistent return. And this year, we have roughly been producing 1 to 2% returns per month. It's what we call a fully on-chain fund. It was one of the first fund globally kind of that deployed on-chain. We've been running this fund since December 2020. We were very early into providing liquidity on-chain, and we took all those learnings from the Apollo Crypto Fund and span out this strategy again in 2020. So this fund has a 4-year track record. The target return for the fund is 15 to 20% in an absolute sense, and we are looking to reach that target in this calendar year. So I think that's fairly attractive. We have a long track record doing this together with our team. So yeah, consistent returns is what you can expect. When it comes to the strategies in the fund, we have been focusing on what is called yield farming, and also on-chain funding rate arbitrage. Yeah. So I don't know, Mark, if you have any additional comments on the Apollo Crypto Fund or the Market Neutral Fund that you'd like to add.
No, I think you've covered it well on these two funds.
All right, so let's move on. And again, we're happy to take any questions at the end of the presentation. So myself and one of our analysts, we attended the Token 2049 crypto conference in Singapore that was held in September. It's held in September every year. And we've been to a number of these now. And it seems to kind of increase every year. I think it pretty much doubled from last year. It was 20,000 attendees to the conference, and even more people coming for all the side events. I think there were over 600 side events in Singapore this year. So really good to see that level of interest in the industry, despite, as I said, altcoins is not necessarily performing that well. Bitcoin has been outperforming, but still a really big interest. And people all over the world are coming to this conference now. And again, I think it's the largest in the world. I wouldn't say there was necessarily any new kind of narratives or themes, but there was definitely a focus on what we call layer 1 and layer 2 blockchains, a lot of infrastructure. Deep in AI is something that people are still interested in. Stable coins were quite prominent as well. Coinbase had a present there as well as Base, and we're seeing a lot of stable coins sort of trading on Base now. There was a few side events around Bitcoin L2s as well. So I wouldn't say nothing really new for us, but for us it was really valuable to be there, meeting a lot of founders. We met with over 10 of our portfolio companies and their founders while there, so really good to get an update from them. Sentiment from them was generally very positive, and several of them have their token launches coming up, I would say in the fairly near term. So that was pretty exciting to kind of connect with them and get the latest update. We didn't see much around Web3 gaming. So Web3 gaming was fairly hot as a narrative a couple of years ago, but that's definitely cooled down more recently. We think Web3 gaming can still be interesting ahead, and something we are generally quite positive on, but it's a quite contrarian view at the moment.
Henrik, why do you think that is? Why do you think Web3 gaming, which, as you said, was such a hot area a few years ago and has launched some exciting projects and chains, why do you think the bloom is off the rose in this space? Has there been a particular event or lack of uptake or lack of sort of compelling gaming content?
Yeah, I think it was, as you said, kind of very topical a couple of years ago, but we haven't seen that breakthrough game yet. So, I think, once we have those kind of AAA games, a game that really gains traction, that could definitely onboard a lot of people, but we haven't really seen that yet. If you talk to kind of the insiders in that space, there is still kind of high hopes for games being developed that might attract mainstream. The kind of the first iteration of Web3 gaming, I think, were not very appealing from a gamer standpoint. So those games brought in more crypto native people, something new for them to try out. But I think the next iteration of games, the purpose of those games is more kind of to attract the Web2 gamers out there and bring them into crypto. So that's the hope for the future there. All right, so let's move on to something else. So want to talk a little bit about DeFi or decentralized finance, which still have a prominent part of our portfolio. Hasn't performed that well recently, I would say, but we do see some of those protocols generating really good revenue, and we believe over time fundamentals kind of will always win out. So we created this, I think, quite interesting graph on the right side here, looking at the DeFi TVL, and that's total value locked in DeFi. That's a kind of a metric on the activity in DeFi and how much money is put in to those protocols. And we also have in the graph overlaid the S&P cryptocurrency DeFi index. So that's a collection of the top DeFi assets out there. And it seems to have a divergence recently where TVL actually has improved a lot in 2024, while if you look at the DeFi index, it's actually down year to date. So we think there's a good chance that that gap could close ahead. And I think we have seen some early signs of some of the DeFi tokens that have been around for a while, don't have very big emissions, but are generating a lot of revenue, starting to perform. So one example of that is Aave, which is one of our fairly large positions in the Frontier Fund, for example. And that token has performed reasonably well in recent months. So I think there is some early signs for a DeFi renaissance or a comeback, if you like, for the sector. So I think it's quite interesting to look at when kind of fundamental metrics are improving, but the asset prices hasn't really moved yet. I think that's always a potential opportunity to look at. All right, and happy to take more questions on this later as well. Maybe we move on to some of the market outlook. We'll talk a little bit about the macro outlook when it comes to interest rates, US election, and then some more crypto-specific potential catalysts ahead. And then we'll finish up with some thoughts on our current portfolio before we move on to Q&A. All right, so one of the kind of big changes when it comes to the macro condition globally this year is the central banks basically all over the world has changed tune and started cutting interest rates. Inflation is coming down to, in some cases, pre-COVID levels. The Fed has already cut interest rate by 50 basis points last month. And when we look at the expectations for the Fed ahead, this picture here shows the expectations for the policy rate at the end of this year, and it's another 50 basis point expectations ahead for lower interest rates. So another 50 basis points cut coming in the States, and we are seeing a very similar picture in Europe as well with the ECB. They actually moved ahead of their Fed this time around. So this is sort of a changing landscape. Usually we say that macro conditions that are easing should be good for risk assets. And I think that makes sense for equities is about discounting cash flows, right? So those tend to perform well. But I think it should be the case for crypto as well. We still kind of will put crypto in the kind of the risk on asset basket among alternatives. So should be helpful, I think, for the crypto markets when we see these kind of conditions. Yeah, Mark, I know you follow macro closely as well. Any additional thoughts on that?
Yeah, I would just echo that. I think increasing, the liquidity into global markets will be good for risk assets. The other issue is the ongoing spending by the U.S. government, the deficit spending. The US borrowing, $1 trillion every 100 days out into perpetuity. We're spending, $1 trillion on interest this year, and potentially, $2 trillion next year. So I think that the ongoing debasement of fiat currencies, and especially the US dollar, will bring crypto and hard assets like Bitcoin into a more sharper focus. You can see an incredible amount of interest globally in the asset class. We'll show that in the flows in the Bitcoin ETFs, which is in the slide, coming up.
Yeah, and more recently we have seen China started to ease as well, which is interesting.
Right.
Okay, US presidential election coming up November 5th, so not that far out. Maybe Mark, you can talk a little bit about this. You're American, living in Australia, so you probably follow this more closely than most of us.
That's correct. So so I think the current forecasts are for a Trump victory in November, and so he would take office in January. He's been very outspoken about the crypto markets. In fact, he's launched his own token, or at least he's associated with it, or is about to launch his own project. He's actually gone so far as to say that if he becomes president, he would add crypto, specifically Bitcoin, as a reserve asset on the US's balance sheet, which would be, I think at a minimum very bullish for the space. And in comparison, the Biden-Harris administration has been very negative towards crypto. At best, they've engaged over the past 5 or 6 months, but the current SEC chairman is, continuing to sue and harass, just about every crypto project he can get his hands on or is operating in the US. Trump has said he would fire Gary Gensler on day one. Again, that would be another positive sign for the crypto markets. And when I mean positive, you would get a regulatory framework that crypto companies operating in the US could adhere to, start to register if needed, and be able to operate without the worry of being sued by the SEC. One other thing just to highlight on this slide is that a prediction market, has hit the mainstream. Poly market has been cited by Elon Musk, CNN, and other news outlets as a more true sort of predictor of the US election race. In the past, the polls have been, notoriously wrong. And actually, when you have billions of dollars of financial bets placed on a certain outcome, the idea is that these would be much more accurate than a poll over the phone or in person. So we'll see. This is something that everyone's watching very closely, and there's huge amount of capital going into poly market and betting on this outcome, as well as a number of others.
It's obviously very close in the poll still. What do you think Harris' victory would mean? Personally, my view is that it won't be worse than the current administration. If anything, it might be slightly better. But just your view. Obviously, a Trump victory would be great for crypto. I agree there. Like Trump has said, Bitcoin should be made in America. It's really aligned with the industry.
Yep.
But what about an alternative?
Well, I think if she wins, I think that would be a negative. She's shown very little interest during her administration to engage with crypto, to speak about it, to be sort of knowledgeable about it. It never really comes up in her interviews. It's not something that she has a very strong sort of policy. So I think the negative would be she would just let the status quo keep going, which means the SEC continuing to sue and harass crypto companies operating in the United States. And that might drive more projects and companies offshore and more capital offshore. So I think that would be a negative. I think at this point, people are hoping that, at least in the crypto markets, there's going to be a change of attitude and a change of administration. Certainly that's going to be linked more with Trump than with Harris.
Yeah, that makes sense. All right, update on the Bitcoin ETF flow. Since we have talked about this a lot this year, we thought it could be appropriate to update everyone on what's happening with the flow currently. So we have seen obviously fantastic inflows to the spot Bitcoin ETFs. We are, I believe, you can see the cumulative flow to the right there, close to 20 billion US dollar. And I believe the iShares from BlackRock has performed the best out of them. That's the kind of the black line on the left chart there. So really good inflows. We've seen kind of outflows from the Grayscale Trust that was converted to a Bitcoin ETF. But I think we saw most of those outflows already. So I think it looks pretty good when we listen to some of those big institutions like Franklin Templeton, BlackRock, Fidelity that all have Bitcoin ETFs. Many of them are talking about starting to include Bitcoin in model portfolios and things like that. So that could potentially be a theme going into 2025, seeing those kind of products being included in a balanced portfolio that investment advisors can recommend to their clients. And kind of the infrastructure has been built, they have proven themselves, their brokerage access is there for those vehicles. I don't have the Ethereum ETF on the slides, but we have not seen that much traction for the ETFs on Ethereum so far. Again, we've seen some outflows from the Grayscale Ethereum Trust that was converted to an ETF. So we actually seen net outflows of around $500 million into the Bitcoin Ethereum ETFs so far. But I would expect it to follow a similar pattern where perhaps we've seen most of the outflows already. And at some point, if Ethereum start performing, then the ETFs are there to kind of to capture some of that flow.
I think it's interesting that we haven't seen any of these large financial institutions register any other ETFs or trusts in large ways, right? There's a few that are being launched for Aave and XRP and others, but there hasn't been sort of a big push to kind of get deeper into crypto. It seems like Bitcoin and Ethereum will be the two major ETFs offered sort of globally, at least for the foreseeable future, or at least in this cycle. So if we do have a big run in crypto or there's increased enthusiasm, these two assets will, assumingly get a lot of new capital in them.
Yeah, that's right. And I think that comes back to what we mentioned before, that there is clarity when it comes to Bitcoin and Ethereum. They're not securities. SEC has made that pretty clear. I think when it comes to a lot of other assets, it will be hard for them to, at least under the current SEC chairman, get those approved. So that could potentially change if we get a new administration, we get a new SEC chair. The view on those assets could change potentially going forward. But if we have the kind of the current SEC chairman, I don't expect anything else than Bitcoin and Ethereum ETFs to get listed anytime soon.
So while we're on the topic of Ethereum, we do have a question from the audience just on Ethereum. Why is it underperformed? Why has it been such a laggard? We've had a number of significant upgrades, going from proof of work to proof of stake, changing the way fees are paid, turning it into a deflationary asset when the fees are high enough. The ETH ETF has launched. Why is it underperformed, especially compared to other things like Solana?
Yeah, I mean, Bitcoin is sort of not competing with anything else because it's digital gold. There's nothing else out there trying to be digital gold. Ethereum is in a different spot where there are a lot of smart contract platforms, and there's always a new shiny thing, if it's Solana or Sui or something else. So from time to time, there's mindshare going into those other L1s out there. Having said that, there is still well over 50% of DeFi TVL on Ethereum or Ethereum L2s, and I can think the scaling of Ethereum is working with L2s. We are seeing a lot of activity on Base, for example, right now, which is backed by Coinbase, and they're seeing all-time high number of transactions, volumes, all of that happening on Base, stablecoin transfers. So there's a lot of activity on Ethereum. They have the best mind share when it comes to developers and projects in DeFi. So we do expect kind of the Ethereum to catch up at some point, but in the meantime, we have those kind of alternative smart contracts layer performing well from time to time. And look, we are, at some point we had a position in Sui, we have a large position in Solana and other L1s as well. So we're taking advantage of those kind of narratives. But I think that is the reason. It has performed worse than we had expected, though, given everything you said about what has been happening on Ethereum.
Yeah, so given all those milestones have been achieved on Ethereum, is there anything to look forward to? Any specific milestone or new event now that they've sort of achieved all these things?
Yeah, so they changed from proof of work to proof of stake. The L2s were launched. I think kind of what will happen next is that the L2 will start decentralized much more. That has been kind of on a more technical basis, something that is still needs to happen. I think Coinbase will continue to push Base, so I think that will continue to happen. I think there's around maybe 1 billion of TVL on Base that could multiply in the next 12, 24 months. I think another interesting development is the very, very high performance L2s that things like Mega ETH. Then there are others as well, like Mega ETH, that are trying to do, say, 100,000 transactions per second as an Ethereum L2. And that is very different to what we see now on Ethereum, because the Ethereum L2s can't really compete with Solana one-to-one kind of in scaling and number of transactions and speed and things like that. But with the introduction of those super high performance Ethereum L2s, you can actually get like something that can outperform Solana in scalability, built on Ethereum with the Ethereum security. So that could be kind of a big next development. Not so much from like a technical upgrade of Ethereum itself. And there's a long roadmap. And if you read kind of Vitalik's post, he's kind of outlined what that looks like. That's kind of a 5-10 year roadmap where, at one point you were scaled actually the Ethereum mainnet as well through sharding. We haven't seen that yet. But that is a very long time horizon. That's not something we expect to impact Ethereum next year. But I think the biggest impact will be the kind of the super high performant L2s that we'll see starting launching in Q1 of next year. So pretty soon.
Right.
All right, maybe moving on. There's another catalyst coming up. I think potentially in crypto markets, somewhat overlooked, I think, and that's the FTX creditors that will start getting paid back. So the court just recently, in the last few days, approved a repayment plan for FTX customers. So there is around $15 billion worth of US dollar, basically, that will be paid back either in fiat or in stable coins. That's a little bit uncertain yet, but that will start happening at the very end of this year, or maybe beginning of Q1, January, February. You will see that money going back to customers that lost money in FTX. Of course, not everything will be reinvested into crypto markets. We have had hedge funds and financial institutions buying some of those claims, they're unlikely to put money back into the crypto markets. They just do it for an arbitrage reason, basically. But you also have a lot of customers that are crypto traders that will basically get money in their account, and some of that will flow back into altcoins and in crypto more widely. So that's a potential catalyst coming up in the near term.
Henrik, is there going to be any direct impact to any of our funds on this?
Yeah, there will be some impact, not material in ACF and Frontier Fund. If you were a holder of the market neutral fund during the FTX event, you will have two classes of shares in that fund. So one of those classes represent that claim, because we were at that point we were running some arbitrage strategies on centralized exchanges.
Thanks.
Right. Let's move on to a portfolio update before we go to Q&A. So how have we managed this difficult market in altcoins? So we've done a few things. We're running a much more concentrated portfolio these days, so less positions kind of to keep track of, focusing on those high quality projects that are generating revenue. More concentrated into L1s as well. We reduce exposure to some of the L2s that have generally been underperforming this year. We think some of the L1s will kind of be the first one to attract new capital that is coming into crypto. So we made that bet with Solana and Ton blockchain being two of the big holdings in the Frontier Fund. We have been more conscious, I think, about token emissions and inflation. So that's something that can really hurt token prices. And we've seen that this year. So we've exited some of those positions with high inflation. Another way of saying that is that they have high FDV, meaning fully diluted value, to market cap, which is sort of this circulating supply is small compared to kind of the total supply. So we exited some of those positions. Yeah, and then maybe some kind of portfolio highlights in our bucket where we invest in pre-token projects. So yes, I wanted to mention a few of them, and we discussed, I believe, a few of them on earlier webinars as well. So we don't want to repeat ourselves too much, but just quickly, Aftermath Finance is one of the top dexes on SUI. So SUI has performed really well recently, and we have exposure through Aftermath Finance, which is one of the top protocols on SUI. So no token yet, but that will happen at some point. Swell Network, I think we talked about previously. There is Swell ETH, which is a liquid staked ETH. There's also now Swell BTC. So that's probably something new from the last webinar. They launched a liquid staking Bitcoin version that can generate yield. And they're also about to launch their L2, which will be secured partly by the Swell token itself. So you will be able to, once they launch their token, you will be able to stake Swell tokens on EigenLayer to secure their L2. So we expect the TGE to happen before the year end there. Sol Finance, they have been really successful with their liquid staking Bitcoin called Solve BTC. They have over 1 billion in TVL for Solve BTC. If you look at, for example, CoinMarketCap, you will see that it's on the first page, is among the top 100 coins out there, Solve BTC. So we expect them to TGE together with one of the top tier exchanges out there. And we invested in the seed round as well as the follow-up round of Solve. Jiritsu, another project we invested in a while ago. They're more into RWA now, and they've done quite well in that space, we believe. They are also set to TG on one of the top tier exchanges out there.
Could you just define RWA?
Yeah, that's real world assets. So tokenized T-bills and other real world assets in traditional finance that are traded on blockchains, on blockchain rails. Multisig is a new multisig wallet, meaning that several parties have to sign a transaction, and they're doing that across different blockchains. And surprisingly enough, there is no good solution for this for the general public currently. So we have high hopes that they can take big market share there. There are things like Safe, which is fairly clunky currently with this, but it only supports EVM chains as far as I know. So there's big potential there. I think they're looking to do a new round as well that is significantly marked up from where we invested, which is good. Multiplier, another project that is about to launch their new product on a chain called Abstract Chain, which will be launched in the coming weeks. So that's pretty exciting as well. And it's an example of a project that is actually generating a lot of revenue. They don't necessarily need to raise any more money. They actually made a lot of money on the product that, the previous iteration of the product. And then finally, maybe we talked a lot about EigenLayer. We have a position in Eigen tokens that we bought since the token launched. We were also a small investor early on into the project, but they finally did their TG. It's listed on all the major exchanges. And we think kind of the technology that they built is one of the most significant technologies that we have seen rolled out in crypto in recent years. So definitely constructive on that project. So maybe I'll end it there unless Mark, you have something you'd like to add.
No, we just got some Q&A. So before move on from this slide, so there's a few questions just on the early stage investments. You mentioned Multisig, which is a custody solution. So we did have a question from the audience. Was this an area that we were interested in? How did we kind of sort of come across the deal, and why did we invest?
Yeah, that's a good question. So the founder is Australian. He's actually the founder of Thorchain, which is a very, very successful project out there. I've known him for 6-7 years now. So sometimes it's through personal relationship we get into these kind of deals and can participate on the seed stage with something new that is being built by a proven founder in the space that has launched a protocol that at some point were worth billions of dollars, right? So someone super successful in the space coming to us with a new deal that's really interesting for us to have a look at, and we think there's big potential in what he's building.
Yeah, so we just have 2 more questions. When we're looking at primary deals and evaluating them, what are some of the areas that we focus on? What are some of the characteristics for the projects, and how are these deals often structured? And are there any things that would exclude us from investing?
Yeah, good question. So early stage deals, I think the earlier you go, the more important is the team and the track record of the team. So I think that's always number one. Of course, it needs to fit in the portfolio and our investment thesis. And for us, it needs to kind of offer something new as well. There are a lot of copycat deals out there, and I mentioned that a number of times. You see something successful on one chain, and instantly you have 5 or 10 teams trying to launch exactly the same thing on another chain. Doesn't provide much value to us. It needs to be differentiated, and that's something we also look at. Deal structures varies. Could be a SAFT, meaning just a token deal, or could be equity plus a token warrant. That's quite popular these days as well. There needs to be a token element to the deal, because that's kind of the nature of our funds. They are liquid funds. We offer our investors monthly liquidity with no lock-in. It's quite unique in the crypto space. It's not like we are running a pure VC portfolio where you have to kind of wait a long time to realize gains. So it is important that there is sort of an exit potential along the line and a TG for the token. And we find that, you know, if you're innovating in the crypto space, you're building L1, you're building infrastructure, a scaling solution, a DeFi project, like a token can be really great to kind of incentivize certain behavior. And most of those projects we find have plans for a token. If you're building higher up in the stack, something, a consumer-oriented app for iOS or something, you know, the probability is that you don't need a token, and that's more like a traditional VC deal with this, yeah, pure equity. So that's probably something that we wouldn't necessarily invest in, because we're really looking for those kind of crypto deals, if you like.
Gotcha, thanks. So we do have a question on, you know, on the performance of the Apollo Crypto Fund, sort of comparing since inception to what's happened in the last couple of years. Since inception, you know, the performance has been very much exceeding Eureka Hedge and the S&P index that we track. And over the last couple of years, it hasn't done as well. Are there specific factors that have led into that, and what's your outlook for the coming year?
Yeah, I think the big picture is Bitcoin and meme coins, so to some extent has been outperforming, which is a sort of a difficult environment for us. DeFi, altcoins, Ethereum, as we mentioned, have been underperforming more recently. So that's a hard kind of environment for us to outperform in, I would say. But we have seen in the past sort of new cycles coming where kind of Bitcoin outperforms initially, and then some of the other assets kind of start performing. And, you know, in the past, you have seen really great returns in some of those altcoins. So I think if you can be correctly positioned into kind of revenue generating assets, you know, our view is that fundamentals will always win out over time. Yeah.
Yeah, no, I think that's a key point to understand, that the crypto capital flows are cyclical. They cycle in and out of certain areas. So something will do well, and that capital will gravitate somewhere else to be able to chase a new opportunity. And you really have to look at these markets in 3 or even 4-year cycles. And as you say, the fund is, you know, it's positioned across what we believe over the long term are going to be the best opportunities across L1s, DeFi, infrastructure, and early stage projects. So
that's right. We are super excited about our portfolio and going into 2025 with everything we mentioned about macro, about election coming up, FTX distribution. I think we're well positioned.
So there's one other question just on the Bitcoin ecosystem, you know, potentially to scale it into DeFi or even smart contracts. How real do you think that is? What's our view on Bitcoin ecosystems and new L2s?
Yeah, I recently put out a tweet on that as well with my thoughts on that. I think we have seen obviously a lot of activity on the Bitcoin L2 side, especially since something called BitVM came to life in the last year or so. There are a lot of low quality projects trying to do Bitcoin L2s. And the T value you see on some of those chains might not be real in a sense. You know, I think there is among Bitcoiners, there are people that are quite skeptical to Ethereum and smart contracts and EVM and all that. So I think it will be hard for many of them to attract Bitcoin capital. So you have Ethereum capital, which are used to DeFi, they like DeFi, that might kind of have a new asset on Ethereum, basically. We have seen some of the Bitcoin L2s basically launch a chain on the OP stack, which is an Ethereum stack for L2s. You know, they might attract some of those Ethereum investors, if you like, or Ethereum capital. The biggest competitor for those L2s, I think, is something like CBBTC and TBTC. TBTC is a decentralized Bitcoin on Arbitrum and other chains. CBBTC is Coinbase liquid BTC on Base and Ethereum main chain. The Ethereum capital is probably very happy to use TBTC and CBBTC. They don't need to necessarily move to a new chain unless there is an opportunity to earn points for a future airdrop or something like that. Much harder for them to attract Bitcoin capital to all those Bitcoin L2s. And to attract Bitcoin capital, you need to be super aligned with Bitcoin, I believe. And so far, the only thing that is acceptable for the more hardcore Bitcoiners is Lightning Network. Lightning Network has a lot of flaws, so they haven't been able to grow as much as expected. So we might see innovation there, where you have something that is very aligned with Bitcoiners. They might, introduce a better Lightning Network, if you like, to those people. There might be some DeFi activity in the future happening as well. But if you're a Bitcoiner, you don't want to necessarily risk your Bitcoin for a little bit of yield or something like that. For a lot of people, Bitcoin is digital gold and not something you necessarily want to kind of move to a new chain or something like that.
You're not supposed to sell your Bitcoin.
That's right. That's right.
Well, thanks very much for that great and detailed answer. I think we've answered all the Q&A. We're certainly over time. We thank everybody for their attendance, and certainly thank you to Henrik for the great overview and the great Q&A. And we will see everybody next quarter. If you'd like to reach us, please go to apollocrypto.com and send us an email, and one of us will certainly get back to you. Again, thanks very much, and see you next quarter.
Thank you.